Okay, so we start with the Ind AS 1, okay, which should have been started first, but anyhow, it has got no much applications other than your application analysis of the financial statement. So that's why we are doing at a later part of time, and maybe probably in Ind AS 8 you have got an application, preparation of the third balance sheet. Okay, so what we are going to discuss here is only three things: a presentation, what they are talking, presentation of the financial statement, current and non-current classification, and the presentation of the third balance sheet, when we should present the third balance sheet. Now coming to the presentation, first this standard talks about general purpose financial statement. Now these are all the financial statement what we prepare under Companies Act are called a general purpose financial statement. Another thing is called a special purpose. Special purpose means meant for specific people there. So general purpose means generally investors, lenders, employees, suppliers, customers, government and general public. But among all these things, who is kept in mind? Whom the priority is given? Investors, lenders, that's it. Our top priority is the finance providers. In the conceptual framework, we are going to discuss this. Because, see, it is not just possible that you can meet everybody's requirement. Yeah, you have kept everybody in mind. But in this, no, these two people are the very important people. Investors are your equity shareholders, lenders are your finance providers. Other people are, they don't need our financial statement much. Why? Because these are the only two people who will invest keeping returns in mind. Employee will not join organization with the returns in mind because he will not get anything other than his salary. Supplier will get material money for what he has paid. But the people will get the dividend or the interest. No. So they need that proper analysis, your ratios and other stuff. Now what is your total comprehensive income? We know already in schedule we started with this only, schedule 3 balance sheet. Comprehensive income is the change in the equity during the period resulting from the transactions and other events. In your, what is that called, conceptual framework for preparation we discussed. Primarily you have got a two thing called a financial position and financial results. Now position as your asset, liability, equity, and results will come from transactions during the year, plus other than those directly changes during the transaction with the owners in their capacity as a owners. Like your net assets will change because your owners will contribute something, but that is not your part of your P&L. You might have given distributed dividend to them. No, that is not part of your P&L. And this total comprehensive includes two elements called the statement of profit and loss account and other comprehensive income, OCI. But OCI is just a presentation. But the cumulative amount of P&L you will show in the P&L account as a profit for the year, retained earnings. Now entity shall present a single statement of profit and loss account with the P&L and OCI presented in two sections. Heading is statement of profit and loss account. You start with the P&L section first, then you said that give the heading other comprehensive income. When you add both, you call it total comprehensive income. But if you see, this total comprehensive income is not reflected in the balance sheet. Only the P&L total will be reflected and other items will go in the respective columns in other equity. On day one only we discussed this. Now other comprehensive income comprise of incomes and expenses, including reclassification adjustments also, that are not recognized in the P&L as required by other Ind AS. Followed, no? So you should include your income and expenses. What should go in OCI? For example, OCI revaluation surplus will go. On day one, if I would have discussed this, none of the item you would have been very clear. You would have been looking the face of this, like what is this remeasurement of defined benefit of benefits? What is this equity at FVOCI? Oh, dangerous. Debt at FVOCI, it seems. Different terminology. Simple, right? And 4-mark question has come on this in exam. First attempt, not later, only one time. Now they say remeasurement, translation of the foreign currency operations, equity, debt, cash flow hedge, gain on loss on the liability, FVTPL from the credit risk. Any of these questions we didn't, time value option in hedging and your changes in the forward contracts in hedging. We never had any questions on these items. So we didn't focus. Hedging, just theoretically we discussed. Most tricky questions. There is only one MTP question on the hedging. Anyhow, you can treat it later. They are not given in the new syllabus. They didn't give. There is one copper hedging, something, one question is there. That's in your MTP. I will share with you. You can look later. But since, see, I go with an assumption. If it was really important, they would have updated in the new syllabus study material. They are not done. And not ignore it. Second priority. Now, the format of the financial statements are provided where? Division 2, Schedule 3. Now, general purpose, what are the general features of the general purpose financial statement? First, it should present true and fair view. Going concern, accrual, materiality, offsetting, frequency, consistency. So, we will see some 8 characteristics or features of the general statement. One, it should present a true and fair view. The application of Ind AS is going to presume to present true and fair, because by now you must have understood, you have already seen Ind AS. If somebody applies Ind AS, is it true and fair? People who don't understand Ind AS, they will ask, what is this? What adjustments you are doing? We don't understand only. It's giving me a weird type of picture. But you say, sir, that is the truth. No, that is the fairness. They are hiding it. Otherwise, you would have understood it very clearly. The entity cannot rectify inappropriate accounting policies by disclosures in the notes to account. Like you followed one cost model, fair value model for investment property, and you are telling I will give disclosures there. No, it is not true and fair. You cannot compensate it by giving disclosures. Now, explicit and unreserved statement. Now, management or entity shall make one explicit and unreserved statement of compliance with the Ind AS in its note. The very first thing they should tell, we have complied with Ind AS. The meaning is, when they say that, every para, whichever is applicable, they have complied with. That means whoever is working in that financial reporting profile, no, should have understood the Ind AS. Otherwise, it becomes a responsibility or headache of the management. That means they have not applied some part of Ind AS and they are giving one statement that, see what happened now after that Enron fraud and all. Today there is a very strict compliance. CFO and CEO has to give one certificate. Now, if something goes wrong, no, they can be behind the bar. That not internal. In the annual report also you see a CFO certificate as per corporate governance. They have to give one certificate that the financial statement, internal controls are correct, financial statements are correct, because they are held personally responsible for it. This is what they saw in Enron, no? And imagine how much responsibility they will take now. It's a big headache, because down the line, if the people are not aware of the Ind AS, ulta they have given a certificate, that person will not be going, they will not take that person, they will take CFO only. He is certified, no? And CEO will point out towards the CFO there. And CFO is a chartered accountant. Nuclear will come into picture. Professional ethics, they will attract the clause now. So many implications are there. That's why it's very important, students, we have to understand, whoever, when you go to the corporate, no, see, your education, like marks wise preparation is done here. After this comes the real life, where you have to really understand each of these, apply it, and you will enjoy that part also. Just like you are enjoying now, preparations, correct? Started to enjoy now. For they need to comply with all the requirements of Ind AS, not on a selective basis. When you are giving this certificate, no, that we have explicit, no reservation, accept this, no, don't tell that. You have to comply with everywhere. And there may be disagreement with the auditor on certain requirements. An auditor might have qualified his report. That doesn't matter. Have you complied? Even such situation, it is assumed to be Ind AS compliant. Like you have given one treatment. Auditor is not agreeing to it. Auditor is telling different, his own theory is telling. No problem, auditor will give qualified opinion. But that does not mean you didn't comply. The point here is you have to comply with every requirement of Ind AS. Just like in auditing standard, auditor has to comply with every requirement of the standard. If he doesn't, he has to bring it to the notice of the readers of the financial statement, or readers of his report. Just like that, if the management doesn't follow any of the paras, no, not for you, okay? In standards on auditing, the paras are there, no, that is for whom? For us, auditors. And if we don't follow, we have to bring that. That's why we have to make one unreserved statement that the audit has been done as per the standards on auditing in India. Correct? We make the statement in the audit report. Just like that, these paras are of the Ind AS are meant for the management. Should they not tell one statement that we have followed? Auditor is to check it. Auditor should verify. That's why this unexplicit statement should come. Now, how it will look like? See, this they can ask you in the exam, because in the study material they have given one extract of the annual report, which they have added recently. Maybe 4 mark they may ask you. Notes forming part of the standalone statement. Note number 2, statement of compliance. These standalone financial statements are prepared as per Indian accounting standard, as per rule number 1 under section 133 of the Companies Act, amended from time to time. That's it. One statement you have to give, that this is as per Ind AS. And this statement says that you have complied with every requirements of the Ind AS. If departure was there, you would have brought over notice. Now, what about the departure? Can I depart? Can I depart from Ind AS? First of all, Ind AS, when you have prepared financial statements under your Companies Act, is it a compliance framework or a fair presentation framework? Fair presence. For this, you need to understand what the difference. Here, no application, but in audit, you will have that application. See, compliance framework means you cannot depart, you cannot add something extra there. Fair presentation means the objective is to give fairness, which is about truth. That you have to comply, but can you depart? What is the difference between a fair presentation and a compliance? The only difference is, if you want to add fairness, you can add some extra disclosures. And in an extremely rare circumstance, if you think that if following this Ind AS is going to misstate my financial statement, then you can depart. You need not follow Ind AS, that particular para. Judgment. Now, has it your Ind AS provided that? That's what first you should check. And the best way to know whether any financial framework is a compliance framework or fair presentation framework, look at the auditor's report. Has the auditor used the word true and fair? Fair is there? Then it's fair presentation. Compliance means it is as per in all material respects. No fair word you are going to find. This is as per the so and so standard in all material respect. Fair word you will never use it. So, since it is a fair presentation framework, can you depart? Obviously, this is what Ind AS 1 says, that look, in extremely rare circumstance, you can depart from any of the Ind AS if the compliance is misleading. Almost. First of all, they said, if you follow Ind AS, your financial statements are true and fair. Can it happen that if I follow Ind AS, my compliance is misleading, my financials are misleading? When? You understand? For example, you have to value the financial statements under FVTPL. Now, suddenly one market volatility happened, exactly upon on 31st March, short-lived. 10th of April, that volatility went. Now, strictly as per the standard, you are supposed to value the FVTPL or something based on the fair valuation. But you know that volatility is a very short-term volatility. If I tell my investors the fair value on 31st March, it is not fair. It's not fair, because that volatility is not going to sustain, that fair value is not going to sustain. If you make that judgment, yes, you can depart from FVTPL and you can still go with the previous values or some other values. Yes, what is that? What is that you are trying to ask? No, what is your question? Is he not going to see the balance sheet in the financial statement? In the financial statement, he will look one item called the investments. That's what auditor's judgment. Auditor has to ask this. Arey Baba, last year, what valuation? How did you do this valuation? Then he will tell the story, sir, market volatility, this and all. That's why auditor, before he going, is he not supposed to have the knowledge of the business? Ind AS 315 says what? Understand the environment first. Then you understand the entity. Because when you understand the environment, you understand the expectation of the users. Now you apply your judgment and say whether management really intends to do that or they are trying to fool. If they fool, you give departure. You give unqualified opinion. So, for example, okay, on such departure, you should disclose the conclusion that such departure is going to present a true and fair with departure, and management complies with the Ind AS except this departure. Just like auditor when he departs, can you depart? Yes. If it is not going to affect your overall objective, you can depart, but you have to bring that notice. No, that's what you check, no, whether Banking Regulation Act has permitted you to depart. Because Banking Regulation Act will not. Banking Regulation Act is a framework, just like Companies Act. Now there is some financial reporting standards. Now Banking Regulation Act has told which financial reporting standards, Ind AS or AS? AS. Ind AS is not yet applicable. So that's why we have to look into that financial reporting framework, which financial reporting standards have been told. Ind AS is not financial reporting framework. There is a difference between a framework and a standard. AS is a standard. Act is a framework. And Act tomorrow tells don't follow Ind AS, then this Ind AS is meant for us only. Why companies are following Ind AS? First of all, why companies are following Ind AS? Tell me. Which section? That is what. If this section was not there, then who cares? First of all, why we should sit and study here? Which one? Need not be, no. GAAP need not be a framework. GAAP is one benchmark for you, a standard. Will GAAP enforce you? Tell that do this. Can you go and tell there is one lassi shop owner, can you go and tell follow Ind AS? No. Can municipality tell him for some reason? If yes, if municipality, if as per license, if I have to grant you license, you have to give me Ind AS compliant balance sheet. Then he has left with no choice other than preparing balance sheet as per Ind AS. So, municipality is a framework which refer one standard. Understood, no? Very interesting. You should know this at a very high level. Yes. Now, below are the departure. You have to tell the title, nature, treatment, what you would require, reason and treatment of the departure. For each of the present period, financial effect of the departure also you need to provide. Now, what about the going concern? Yes, when preparing the financial statement, management shall make an assessment of the entity's ability to going concern unless you intend to liquidate your business or you have got no other alternative. However, you should make such assessment at least next to 12 months. So that at least if you can live 1 year, at least this going balance sheet you are not a going concern, you are going concern only. However, if you intend to cease 18 months from now, then this balance sheet is prepared on going concern basis or non-going concern basis. Non-going concern is not, see 12-month assessment you have to make if you want to do on a going concern basis. But if your intentions are very clear that you are going to close, it doesn't matter when, even though it is 18 months from now, on this you should stop preparing going concern. You have to go for liquidation basis of accounting. No, I am just telling 18 months, this is an example. 12 months is what told in the standard. Now, the profitability of entity with no financing problem is generally one of the conditions. Like if you are profitable, then there is no sign of going concern problem. However, there are certain indicators which can cause significant doubt. These are only 4 examples. You are not able to pay to the creditors, your successful competitor came, and all these are exactly, actually more are there in your essay. Essay 580, no 570, I think, going concern. Very detailed points are there, and on each of the, any of the points they can frame one question. The case studies will come on any of the points. These are all the examples of matter, like somebody is not able to pay to the creditor. Is it a sign of going concern? Is it a sign of going concern? Why? Greater than how much? How much? Above how much? 1 crore. That's why you should have that knowledge. If the amount is more than 1 crore, immediately the person whom the amount is due, he can go and ask that IBC. Within 180 days now the result outcome is going to come. You will pay or you will not pay. Not pay means close the business. Followed, no? So these are all the indicators which has to be taken care. If the management has got a significant doubt on the uncertainty, you have to disclose it. That means you know that you are a going concern, but there is one doubt. And also going concern accounting is not followed. You should disclose the basis, like which method of liquidation accounting you followed, that you have to say. Now accrual basis of accounting you have to follow, except cash flow information. Cash flow definitely cash basis only. Now materiality and aggregation, yes, entity shall present separately each material class of similar items. An entity shall not reduce an understandability of the financial statement by obscuring material item with immaterial. Obscuring means you give material and immaterial together. So people just ignore, no? And one of the item is sitting is a material item there. Don't obscure the importance of the material item. So entity you have to present all them separately for each class of similar items. Can you do offsetting? It is not as, then you will offset everything, no? Entire income I will offset with expense and show one item, no? No, that's why they say that entity shall report separately assets and liabilities, income and expenses, the first level of no offsetting. Shall not offset assets and liabilities unless permitted by any Ind AS. Is any Ind AS permitted? Deferred taxes, okay? Measuring of assets on net valuation of allowance is not offsetting. Like you have got accumulated depreciation, you deduct it from the PP and show. It is not offsetting, it is a presentation. Offsetting means that doesn't come into picture only in the on the face of the P&L balance sheet. Like Ind AS require that an entity to present on a net base gains or losses from a group of similar transactions. Similar transactions are there on, you can account it on together. Accordingly, P&L on disposal of various item of PP, you can present on net base. But a PP and like under PP you have got something like PP and investment property, show it separate. But under that, yes, you can aggregate and offset. Item wise, like separately you need not show it. However, gain on losses should be presented separately. If in that also, if it is material, you have to present it separately. Frequency, how frequently you should report. An entity shall present the complete set of financial statement at least annually, 12 months. However, when an entity presents the financial statement for a longer or a shorter period than 1 year, it should disclose the additional period covered, the reason for using longer or shorter period, and the fact that it presents are not entirely comparable. Like for example, very nice example they have given along with one extract. So they may ask you this in the exam. Generally, you should present for 12 months. Is it possible that you are presented for 14 months, 13 months? Is it possible you are presented for less than say 9 months? Yes, when, see, now a parent acquired one subsidiary. Now subsidiary financial statement, they were closing on 31st December, calendar year they were following. Our company parent is following 31st March. Now to align, otherwise consolidation is a big headache now going forward. So I want to do first time alignment. For this what I do, no? My first financial year should have been closed on 31st December. I will extend it up to 31st March. So that year, my financial year figures are 15 months. Now can I compare it with one previous year? No. That's what I say, that amount presences are not comparable. And why I am doing it, I should tell the reason. So the reason can go like this: base of preparation, reporting period. To align with the reporting period of the parent, entity has presented the 31st December to 31st March. Now the amount presented are comparative figures only for 12 months. So they are not comparable. Not any reason, it should be a valid reason. No? Like again, same thing, you want to like your 31st December, this year you started. Again you want to align, just you will close for 3 months, finish. From Jan to December, March you will close, that is 1 year, it is a shorter period. Then from now, again new year starts from 1st April now. These are all one time adjustments. Now comparative information, understand. Now entity should present a comparative information for preceding period for all amounts reported in the current period financial information. Like whenever, this is again, Ind AS 1 and your Schedule 3 are talking to each other. Probably Schedule 3 is designed looking at this only. Otherwise, there is a conflict, no? And if there is a conflict between Schedule 3 and your Ind AS 1, who is going to survive? If there is a conflict between what Schedule 3 says versus what your Ind AS says, who has got an upper hand? This is what you think, but actually Ind AS got as an upper hand. There is a Ministry of Corporate Affairs has released one notification which overrides what you otherwise generally Act has got an overriding position. That notification has given this Ind AS as an overriding position. If there is any conflict, should not come, but anytime your Ind AS got a superiority. Just for your academic interest. Now the comparative information for narrative and description. What about the notes to accounts? I'll give you so many disclosures during the year. Should a comparative? Yes, should be included if it is relevant to understand the current period financials. Now what you should present in a minimum, at a minimum you should present two balance sheets. This year balance sheet, last year balance sheet. Two P&L account. This year P&L, last year P&L. Two cash flow, two changes in equity related. So this is the minimum thing you need to disclose. Now you want to present something more than a minimum. Can you do it? Obviously, you wish to do, definitely do, no? Entity may present a comparative information in addition to the minimum. Like you want to give third P&L account also, previous to previous P&L. This comparative information may consist of one or more statements. Like you want to give third balance sheet, third P&L, but need not be complete. Like it's not that one third P&L means third cash flow statement, need not be everything. Selectively I can give, only one portion I can give. But if you give that, then note to accounts should consist of additional statements related to that. If any notes to accounts you present, it may have to related disclosures. Now consistency in the preparation. An entity shall retain the presentation and classification of items from one period to another period unless the Ind AS requires the change or your operations will change significantly. Yeah, that is part of the change in your same. We had already discussed, no? Your change in the policy type of thing. Okay, so before we proceed into current and non-current, okay, let us discuss some of the theoretical question. Have you understood in principle? Simple, basic only. What is P&L? What is balance sheet? Okay, what is your presentation items and all? Okay. An entity prepares the financial statement that contains explicit and unreserved statement that they are complying with Ind AS. However, auditor's report contains a qualification. Is it acceptable to make such statement? Yes. But how do you answer this? Like, not much examination question, one illustration question. Yes, if you have got a bona fide reason to believe that you have complied, yes, you can make such statement. Next question has come in your examination, very tough question for 4 mark. By that time, it was already there in one of the MTP there. Study material question also, it was there. And the question goes like this. Entity has undertaken various activities. They have remeasured the defined benefit, current service cost, revaluation surplus, etc. Identify and present the transactions in the financial statement as per Ind AS 1. Now tell me, students, how you are going to identify? Anyhow, someone who have seen this at least had an idea what to do, even though you don't see. Okay, identify means you have to identify where it will go. Present means you have to prepare one statement. Now first item will go where? OCI, second P&L, third OCI, 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 P&L, income tax expense, Ind AS 12. That you should tell. Have you done? You saw Ind AS 103, 102. What accounting entry you passed for share-based payment? Come on, Ind AS 102, when you were expensing that, what accounting entry did you pass? ESOP reserve credit, debit what? Expense, no, it's a cost. They said payment cost. Okay, so now, and it is a reserve, huh? It's not going to go to OCI also. So your current service cost. Oh, I think we missed here. I didn't read also fully, because translating the monetary assets in foreign currency and translating of the financial statement of the foreign operation, both are different, no Baba. Ind AS 21 we had such a beautiful discussion that there are two, one is a transaction, one is operation. Transaction will go to P&L. I also didn't read the second portion of the thing, and operations will go to OCI. So you have got 4 items which is going into P&L, and rest of the questions will easy 4 mark, no? This is the presentation. No, see, again I am telling you, someone would have seen this one MTP, no? It had an idea. Others doesn't matter. You could have provided what you would have done. I am damn sure you would have provided, if you didn't knew this, you would have presented in the form of one balance sheet under non-current assets, non-current, any of fine, no. Where you will show? Yeah, OCI you will show under other equity. You would have prepared 4 marks. So this was the expectation. Now one going concern related question. They may ask you in audit also this question. Entity XYZ is a large manufacturer of plastic products in the local market. On 1st of April 2016, newly elected government unexpectedly abolished all the import tariff including 40% tariff on all imported plastic products. They banned what? Not plastic, import tariff they removed. Now what impact it will have now? Emergence of one unexpected competitor. Who is that competitor? By default you take China. Now Chinese products are very cheaper. How government compensated or supported you? By putting 40% tax so that it becomes comparable. Now many other economic reforms were also implemented by the government, contributed to the value of country's currency appreciating significantly against most other currencies. What do you mean by this? So who will be happy when the currency gets appreciated, importer or exporter? When rupee gets appreciated, who is happy? No, they said government took so many actions. Because of this, country's currency, rupee, got appreciated. Who is happy? How? See, it's one person happy, another person has to cry there. No, that's what I want, your sure shot stand, because this requires your thinking of AFM. Who is happy when the rupee gets appreciated? That's what you should tell, very sure shot. Importer is happy because rupee is appreciating means dollar is depreciating. No, that means you have to pay less price now. Exporter, okay. For this that's the confusion. See, if $1 is equal to rupees 50, now $1 rupees appreciated means what? Dollar depreciated, now it became 40. Now dollar depreciated. Now importers feel very good, no? They will import more. On top of it, in Kannada we call it Gayada Mele Bare. 40% import tariff also taken out. Now you can understand the situation of this company, no? From two angles they are getting hit now, not even one angle. And this analysis you have to do. We are compensating. You are a local manufacturer of thing. Import has been abolished. On top of it, yuan has become cheap now. Then importers will double their imports, no? Why they will buy from you locally? Currency wise also you got benefit. Tax also gone. So you are into soup now. It's not just one. Now before 2016, entity was profitable. However, because it is unable to compete, that's what emergence. By looking at it, it should strike to you one emergence of competition has happened. low priced import, they went into losses. Now on 31st March 2017, now this is your reporting period, their equity was 1000 rupees. During the second quarter of the financial year ended 31st March, like 30th September, the management restructured the entity's operations. Now the restructuring itself should give you hint of something problem now, because they said that you don't recognize restructuring cost, check for impairment. Don't anticipate the future loss and all. The restructuring helped to reduce the losses for the third and the fourth quarter to 400 and 380. During the year ended 31st March 2017, the entity reported a loss of rupees 4,000. In January 2017, local plastic industry and labor union lobbied the government to reinstate the tariff on plastics. They said, Baba, it's not going to happen. Now on 15th of March 2017, the government announced that it would reintroduce limited plastic import tariff at a 10% in 2018. However, it emphasized that those tariffs would not be protective, as the tariffs enacted by the previous government will do, but don't expect the same level of like what the previous government did. In its latest economic forecast, the government predicts a stable currency exchange rate with a short term, with a gradual weakening of the jurisdictional currency in the long term. That means, what does this mean to say? Short term, whatever depreciation has happened in the foreign currency, it will continue, and gradual weakening of the jurisdictional foreign currency means what? That reversal of this foreign currency impact, no? Your rupee weakening means what? Dollar strengthening. This will happen in the long term, not right now. Till that I should be alive, no? To see that day, 5 years down the line. I am bleeding here. Double problems. Now management of the entity XYZ took one assessment of the going concern on 31st, because all these events show on 31st March 2017, because you made a loss of 4,000 also. The management projects forecasts the imposition of 10% tariff on the import of plastic product would at current exchange rate result into, at least they say that, look Baba, anyhow these discussions are going on. In 2008 they are telling 10% is going to come, no? At least if that happens, and for a given level, at least I will be profitable. Now how should management should disclose the information about the going concern assessment in its annual financial statement? See students, one thing is you know about the going concern. First of all, tell me, is it a going concern? You know it, very clear. There's no confusion about it. They didn't ask you whether their assessment is correct or not. But look at the question what they may ask you. Is it a what question? It is an illustration question. High probable question. What they are asking? They are asking how you are going to disclose it to the shareholders now in your 31st March annual report. This needs practice, no? Okay, so this question can be a probable question. Then you tell, as per Ind AS 1, management should make an assessment how they intend, if they have no realistic alternative, at least they should cover 12 months. Now this part of the question you may ignore, because they said nothing they asked you about analysis. Is their assessment correct? Okay, if that question comes, is their assessment correct, then you may probably write what should management do when they face a going concern problem. But the question is very clear and straightforward about disclosure part. So you can just more focus on the disclosure part. Otherwise you can write always, if you practice well, you can write extract from the notes to accounts, note number 1, basis of preparation, because there is a going concern is a problem, significant doubt is there. Now on the basis of the assessment on 31st March 2007, financial statements are going concern basis. The government will reintroduce the import tariffs, and at the current rate, if it remains the same. So we have, however, management assessment assumes that government is going to bring and my exchange rate remains the same. So that let the users know. Simply I cannot make any assumption, no. What if one user has got a different opinion that exchange rate is going to still become worse? Or one investor like Rakesh Junjunwal predict that this government is only telling to just to drive away those union, They are not really serious about improving. See, your entire assumption of going concern is based on what, Baba? Only on one assumption that the government is going to bring. Are you sure? If you give vote to them, if you bring some, they all see, they analyze that way. No, oh, you are a union there. How many people are there depending upon you? How many? What is the big size? They analyze from that angle. So, if giving this import tariff will give me your and your family members vote to me, next day morning I will do it. So, that may be the understanding there. See, they have to balance so many things. Huh? This is one thing. That's why you have to tell on what basis you are doing it. So, on 15th March, government announced limited import tariff. Government emphasized that the tariff would not be as protective as 40%, and management forecast that the 10% would help me with the remaining profitability. So, we have got assets of 1000. If the tariffs are not imposed, exchange rate remain unchanged, your liability could exceed the end by end of so and so. We have to tell that impact also. Our balance is so much, but if this continues, then our all assets will be eaten up. On the basis, we believe that we are going concern today. Are you clear now how to answer this? Test your knowledge 4. Okay, very important question. Test your knowledge 5. XYZ is the company is into manufacturing of tractor parts, mainly supplying components to the OEMs. You understood? OEM is the original equipment manufacturer. Like today, Nike. You purchase one Nike shoe. Do you think Nike manufactures it? No. Somebody manufactures and gives to Nike with the Nike brand. Nike will spend only time on marketing. So like this, somebody is supplying some component. Company does not have any subsidiary, joint venture or associate. Who? XYZ. Now, during the preparation of the financial statement on 31st March 2011, the accounts department is not sure about the treatment or presentation of below matter, and they advise asking your advice. Now, there are qualifications in the audit report on with reference to Ind AS. What to do? It's okay. See, in which context they have asked, question is very silent. So, they are asking in the context of, can we give this explicit statement of compliance? See, now you can tell, provided you see in the bracket now here. Otherwise, somebody comes and simply asks you only this much. There are 2 qualified audit report in the related to Ind AS. What answer you will tell? You don't know, no, half of the question. They should tell in which context they are asking your advice. Their query is, can we give that explicit statement? Answer is yes. Clear? Now, is it mandatory to add the word called standalone before the component financial statement? No, again, this we didn't discuss. It is not mandatory to add. However, you need to disclose in the financial statement that they are individual financial statements. See, we discussed, no, there are 4 types: separate financial, individual financial, so that somebody will come to know. Since you don't have any subsidiary and all, okay, so you need not tell that in the individual financial statement. You have to tell which one. We have to specify that. Otherwise, there is a confusion. No, have you presented consolidated? Simply say balance sheet as on. Which balance sheet? Consolidated balance sheet or your separate standalone balance sheet? That confusion is going to happen. Now, the company is an Indian company presenting the financial statement in rupee, obviously. Is it necessary to write the financial statement that the financial statements are presented in rupee? Yes, otherwise somebody will not come to know, which statement. So, this is mandatory. The company is having turnover of 180 crore rupees. The company wants to present absolute figures in the financial statement. Because for tax audit purpose, tax related findings, company always need the figures in absolute amounts. And now schedule 3 talks about the round off. Up to this, you can do this and all. Yes, you can do it. The company has sales transaction with 10 related parties during the previous year. However, during the year there are no transactions with 4 of the related parties out of set 10. So you have got 10 who as per Ind AS 24. Hence, the company is of the view that it need not disclose the sale transaction with the 4 parties in the related party disclosure because these parties are no transaction during the current year. Where comparative. We discussed in the comparative perspective they are asking, should we disclose that? Yeah, because last year there was a transaction, no. Now, evaluate the above matters with respect to preparation and presentation of general purpose. See, if you not have seen this question, you would have found it what they are expecting here. At least you know it that it is in Ind AS 1 they are asking this context. It's easy. So it's a very simple thing. So you have to take that, you have to make an explicit statement. Okay. And if you have got a bona fide reason you have complied, you can give it. So even though auditor given a qualification, fine. But if you are not complied with any of the standard, then you should not give this description. Second, it is not mandatory to add the word standalone. However, entity need to disclose in the financial statement that these are individual financial statements. Now, it is mandatory to write rupees. Ind AS 1 states that entity shall display a presentation currency as defined in Ind AS 21 prominently and repeat it whenever necessary. Now, entity can present the figures in the absolute numbers. It is mandatory as per requirement of revision 2. Not mandatory. You can round off depending upon the turnover. So, if your turnover is not eligible for round off, then you have to present in absolute numbers. They have got one limit up to 1000 crore, up to 10,000 crore. Schedule 3 they have given. If you are not going to cover that bracket, then straight away you have to provide in absolute number. No, entity is not required to disclose the sales information as per Ind AS 1 except entity shall present the comparative information in respect of all the amounts reported in the current period. The entity shall include a comparative information for narrative description also if it is relevant for the understanding. Okay, here we may have to say that since the current year it is not there, last year there is nothing to compare, probably they are telling from that perspective. They have to give for narrative descriptive only if it is relevant to understanding. So, they have taken a stand that it is not required. So, this question seems to be important, nice question, they may ask you this question. Is offsetting permitted in following circumstances? See, that was a generic thing. Now, RTP, this question has come in November 21 and it is already there in your test of knowledge also. Expenses incurred by the holding company on behalf of the subsidiary, which is reimbursed by the subsidiary. Whether separate books of the holding company, the expenditure and related reimbursement can be like in your standalone financial statement. In your standalone, you have incurred some expenditure on behalf of the subsidiary. Now, what subsidiary has done? He have reimbursed you. Now, only question is, should I show expense on debit side, income on the credit side, or should I net off? Yeah, it's a net, not in the standalone. Huh? They didn't ask you in CFS. We should show separately, or can we net off and show net amount? So, look into the substance. No, is it your income? Did you earn it? Your substance, what? It was a reimbursement for the related expenses. Government grant, have you not done that presentation wise? Now, whether the P&L on the sale of assets or loss on the sale of another asset can be offset. If it is the same class, we can do. If it is material, we have to disclose. Whether services rendered for in a transaction with the entity and services received from the same entity in two different arrangements, can it be receivable and payable be offset? Yeah, this is what generally we are doing. So, first it can be 1 mark question. As per Ind AS 1, offsetting is permitted only when it should reflect the substance. Are they 100% reimbursing you? No, that's what. If it is not, then it doesn't come only. No, okay, understood. If we have paid, it is an investment in subsidiary. My accounting entry is investment in subsidiary. Now when they give me, no, they would have treated as a dividend from subsidiary, no. Okay, yeah. See, anyhow, doesn't matter, doesn't matter. See, then no problem. See, what they said, you may present net. Now, you can present it net because ultimately it reflects the substance. Now, if you are telling, look, I will take it to the balance sheet, what is your accounting entry when you have paid the expense? Investment account debit to bank. And the subsidiary reimbursed you, what is the accounting entry? Bank to investment. Dividend you say, or you say investment, one and the same. So, can I show net? Yeah, net. But you can give the disclosure because this is a related party transaction. Ind AS 1 requires to present the net basis losses from a group of similar transactions. Accordingly, gains and losses from the disposal of various items can be presented on net basis. However, if they are material, you have to present it separately. Ind AS 1 prescribes assets and liabilities, income and expenditure should be reported separately unless offsetting reflects the substance. So, Ind AS 32, financial assets and financial liabilities should be offset if they have got a legally enforceable right. But it's, yeah, we have got here because it's my contractual obligation with you, my contractual right also with you. So, if entity intends to settle on a net basis, thus in the case receivable and payable should be offset against each other and net amount should be presented if there is a legal right to set off, otherwise you can present separately. If you do not have that rights, if the contract says that no, do not touch that, this is a separate transaction, then you have to present it separately. Clear, no students? Yes, so next is the current and non-current transaction. Yes, so what is the logic of current and non-current? Very simple. So, non-current or current classification should be primarily based on the operating cycle. This is one of the conditions. Now, what is the operating cycle? It is the time lag between the acquisition of assets to manufacture something, process, and realization of cash. Now, when the entity's operating cycle is not clearly identifiable, it is assumed to be 12 months from the end of the reporting period. Now, how do you classify some asset as a current or some asset as a non-current? The standard gives you certain conditions. It says that any asset at the end of the year which is sitting in your balance sheet, you have to classify as a current when, if you are going to expect to realize that asset or intend to sell or consume that asset. That means this asset will get diminished within 1 year from the balance sheet in its normal operating cycle. Now, what is your operating cycle? Operating cycle is from the time between your acquisition of the asset till the realization of the cash. Like for example, it may take 15 months, still it is current. Something you are going to pay within 15 months. It's not just 12 months. 12 months is one of the conditions. Still it is a current asset. Why? Because it is within your normal operating cycle. Or forget about normal operating. Something you are holding for trading. By default it has become current. Forget your normal operating also, forget your 12 months also. Or you expect it to realize within 12 months if no other conditions, like your operating cycle you may be big or it can be small. Like say your operating cycle is within 8 months only. And what is the operating cycle of a bakery? Bakery shops are there, no? It's 10-15 days. Why? Today they bring the contents, they prepare the sweet, within next 5 to 6 days they have to sell it. So their operating cycle is very small. If you go only with the operating cycle, then every item on the balance sheet is a current only there. Then at least 12 months. So you can go for that. Okay. So our asset is cash or cash equivalent as defined by AS 7, Ind AS 7. unless it is restricted from being used to settle a liability for at least 12 months after the reporting period. So, any cash and cash equivalent will be your current. What is your cash equivalent of Ind AS 7? Cash equivalent, see, cash is clear, current only always. Cash equivalent, what is the definition of it? Short-term investments. What do you mean by short-term investment? 3 months from invest, from the date of acquisition, it is 3 months. Clear, no? That's the short-term definition, not from the 3 months for maturity or something. Now, if it is restricted, you have got a cash balance. Like for example, dividend payable. Some bank balance is there with you. And that bank balance has come because you have transferred it to pay to some investors to claim the dividend. Can you use that money for your day-to-day purpose? No, it is restricted to pay the dividend only. So, the asset is restricted from being used at least 12 months from the report. That means, if it is restricted only for say 8 months, after 8 months if I could have used it, then it becomes current. But if at next 12 months if I can't use this asset, then this asset becomes non-current. So, if any one of these conditions is fulfilled, you classify. An entity shall classify assets which is not a current. So, if your none of the condition fulfill, it becomes a non-current. Similarly, what is a current liability? A current liability is the one which you are planning to settle in your normal operating cycle, or you are holding it for trading purpose, or it is due for payment within next 12 months, or it does not have a right to defer its settlement at least for next 12 months from the reporting period. That means it has become current, okay? Or some liability is there. For next 12 months from the end of 31st March, today I am on 31st March, is it possible that till 31st March 2025, I can defer the payment? That means you can demand payment only on 1st April 2025. Then on 31st March 2024, it is non-current. But if I cannot do that, you could have demanded any time within next 1 year, it is my current. And all other than current are non-current. Now, biggest problem in analysis of the financial statement, when they ask you to prepare a balance sheet, current, non-current, current financial, other current financial, other non-current. That is what you need to practice. Now, what is an operating cycle? It is the time between the acquisition of the asset and realization of the cash. When the entity's normal operating cycle is not defined, it is assumed to be 12. Okay, before we proceed into the third balance sheet, now we have to solve some problems on current and non-current, very small simple problems. Only that balance sheet, that loan related thing is little tricky. Okay, first question. B Limited produces aircraft. The time lag between the first purchasing the raw material, some steel and all, and when the company completes the production and delivery is complete is in 9 months. Right? It will take me 9 months to develop one aircraft. And when I deliver, it will take me additional 7 months to recover the price. What is my operating cycle? So, it is 9 plus 7, 16 months is my operating cycle. It is a cash realization also. Now, how should I treat my inventory and debtors who is due within next 12 months? Since the inventory and debtors will be realized within the normal operating cycle, that is 16 months, you should be classified as current. See, generally you say, sir, 16th month means it is non-current. No. There is one debtor who is going to pay me in 16th month from now. Which type of debtor it is? Non-current. But we will classify them as a current only because that is within my operating cycle. If there is a confusion, then operating cycle is not clear, you will take 12 months. Now, one example they give, on 1st of April 2012, XYZ invested 15 lakh surplus funds in one corporate bond that bear interest at the rate of 8% per year. Now, interest is payable on 1st of April every year. The principal is repayable in 3 annual installments of 5 lakh rupees starting from 1st April 2013. How the above bond will be presented in the financial statement of 31st March 2013? Can you tell me, students? Please pause the video and can you tell me at the end of the year how these bonds will be presented? Yes, you can pause the video and tell me the workings. Is 109, no? See, what I am looking is, since how the bond will be presented in the financial statement. In the financial statement on asset or liability side? This will show on the asset side or liability side? I don't know. See, they asked you on the, see, all it goes with the accounting entry, no, Baba, and you are understanding. That's what I am telling you. Please pause the video. This is 109, no. Asset. You are invested, no. So, first I will write the heading called asset. Under asset, what you have? Non-current assets. Under non-current assets, what you have? Financial asset. Similarly, current assets will go. Under current assets, you have got financial asset. Will you show this investment there in both the places? Now we are on 31st March 2013. Can you tell me what is this balance? What is this balance? That's what I am asking you. You are not required. You can use your mind only here. Calculator not required. Questions clear now? Should you split into current non-current? Yes, because you have to apply these operating rules. Now again, this is like more like an L3 type of thing now. And in analysis of the balance sheet, this is what you are going to find. There you have to give that balance sheet, current, non-current and all, because it's a mixed question. So you have to just tell me how much is the current portion of the loan and how much is the non-current portion of the loan. For this you have to be very clear with 109. Yes, students, now you pause the video and do this and tell me. Okay, wait, somebody has, Prithvi has come with number. What I should do here? You have to just tell me 2 numbers. I don't know. You tell me one number. One number only you should tell me. No? 10 lakhs and 10.4. Okay. 0.8. Okay. What is your opinion? Yes, Aditya. This, I don't know, Baba. You tell me. And afterwards you say, sir, what is this? I don't know. You tell, what is your opinion? What is your numbers? 10. Current also 10. How much is my current portion? Correct, Baba. Correct. What you tell is everything is correct. But tell me the amount here. Obviously, that's what 109 says, no? When you discount at 8%, what's going to happen? Okay, I'll take you now. What is my first accounting entry? When I'll pass? To bank, 15. Investment, how much? Should you need to do? Not required, no. It is at market terms. Now, have they told you it is off market term and all? No. Then you know that the transaction price itself is the fair value. So it is 15 to 15. So investment account came something called a 15. At the end of the year, did you do any accounting entries? Yes, you prepared one amortization schedule. As per that amortization schedule, how much interest expense you passed? Interest income. What accounting entry did you pass? Expense. Investment account debit. This means, here means, this is 109. This is what they do. You have to be very clear. See, once you are, other party, when you have invested, that person will repay you, no? Confusing, and ulta, they see the dates what they have given you. On 1st April, this is happening. When you look at such dates, no, I'm telling you, see, in exam, they may not tell you fully. But if at all you see, in none of the 109 question, we have come across dates, if you observe. Why? Because all L2 questions. And they have given you 1st April repayment, no? Understand it is an L3 question. They expect you current and non-current, clean. They may not tell you there all these stories. You have to make certain assumptions. Otherwise, why on earth they should tell me 1st April? Show me one question in 109 where they have told me 1st April. I don't know. Maybe in that, then you go and check. Followed, no? See now, what entry you passed here? Bank account, investment account or bank? Bank account debit to investment income. Investment account debit, no, Baba, because receipt happens on 1st April. 1st April, no. They said no, both are given on 1st April. So my accounting entry on 31st March is investment account debit. How much to income? P&L? 1 lakh 20, 15 lakh into 8%, correct? Now, at the end of the year, what is my total investment value? 15 plus 1.2. Is this when this 1.2 is payable? When this 1.2 is payable? 1st April, next day. So it's current or non-current? Current. Out of 15, when you are supposed to pay? Full 15? 5. So is this out of 5? 5 is the portion which is you have to pay immediately next day. And balance 10 here. So, yeah, but second leg, you are told, I don't know, I was asking, tell me second leg. Okay, it is 6.2. This is perfect. Followed, no, understood? I told no, I will give confusion. If I don't give, I say is going to do that. And learning for you is look at these dates, okay? Be careful. L3 questions will come like this on 1st April and all. They say, somewhere we have come across somewhere. I don't know where we have come across that your dates and all, no? Year and all. See, be careful. Calendar year they will give you 6. 1.2 is the interest portion. Receivable, no. You have invested, no, Baba. Interest is receivable. No, this is your 31st March entry, but accounting entry is investment account debit to interest income receivable. Sorry, interest income receivable account debit to interest income account. But on 31st March it was receivable, no. Are you not going to pass entry for that? That's what I tell you. Please pass the journal entry. Things will be clear. Otherwise, you have to just look at the question only there. Clear, no, Sana? See, what happened at the end of the year on 31st March, 1 lakh 20 is an accrued interest, but you didn't receive it. 5 lakh is something current portion which you have to repay now. Therefore, the current assets are expected to be realized, this you have to tell. So, installment of 10 lakh you will be paying after this thing. So, it is none of these 4 conditions are fulfilled. So, because of these conditions. So, if you were to look at the balance sheet extraction, it would have looked like this, which they didn't ask you. Clear? Now, this question came in MTP. This was an example question what I was discussing. Illustration also came. Charming issued 1 lakh 10 rupees bond for 10 lakh. 1st April each year interest. Understand, current, non-current. 8% per annum is payable on outstanding capital. First payment will be made on 1st April 2024. On 1st April every year, see how many times, that is April 2014, the Charming has got a contractual obligation to redeem 10,000 bonds at 10 rupees per bond in its statement of financial position. How it should be presented in its statement of financial position at 31st March, okay, continuation, this question, how should you present it in the financial statement? Can you just tell me the balance sheet extract, students? Please understand the question. Students, please pause this and tell me the extract. If you ask my gut feeling, no, I say the previous question can come. No? Previous question I said, they have given you in an example. which generally I don't know people how much they will focus. That is the financial asset related. It will create so many confusions. This was very clearly told, contractual obligation, this, that and all. Obligation, no. So, on the liability side, I have got a non-current liability, financial liability, current liability, financial liability. Can you just tell me these two amounts? I am asking only two amounts there. Very easy actually. Same, actually it's same. Ulta. One is coming in MTP, another is coming from study material. Example. So my gut feeling says example is important. 1 lakh? Perfect. See, clear now? No, see, this is the power of, if you have seen somewhere, it gives you, and if I understood very importantly what you are doing there, it gives you, it doesn't take time. So write the same stories again, all the stories are same. So you say that in this is for our understanding, right? You have to explain this story. Corporate bond you will show at 9 lakh and 1 lakh 80 will be the financial. Interest portion is part of your financial. What is your accounting entry? Why we have not done? Because it is at a market rate. No, if it was at off market rate, what you are contractually paying 8%, market rate was 10%, then you should have found out the present value of this cash flow. Then that 2% would have been your additional cost. Now, an entity has placed certain deposits with the different parties. You keep cylinder deposit, electricity deposit. You have kept electricity deposit, tender deposit, GST deposit under dispute. How it should be classified at the end of the year, current or non-current? Electricity deposit. Why? What are the terms of electricity deposit? No, wait. Electricity deposit. Can you get it right now? Is there any restriction not to submit you next 12 months? Followed, no? Otherwise, if you look at its very nature, it's current. You can realize any time. You can realize any time. You can just switch off the plug, take this plug and hand over them and say, I don't want it. But the nature is like a non-current only, forever. It's the income for them. Cylinder deposit, what you have given on day one, no? It is forever for them. Follow? Can they recognize it as a revenue? Then what they will do? Now for this 115, first that condition you have to apply. Have you substantially transferred and don't have any obligation to do it? You have no. Your performance obligations are going on. So till that time, keep it as a contract liability in your balance sheet. Don't recognize it as a revenue. 115 definition. Okay, so second one, tender deposit. Depends. Answer is depends. What is tender deposit means? Like suppose you want to apply for a tender. Somebody comes, okay, if anybody is interested, please bidding. Now the moment I say, so suppose I want to sell one property on bidding basis. Interested parties, please submit your bids. Now the Tom, Dick and Harry is going to submit the bid. And unnecessarily people will start playing. That's what I say. People who are serious only should come, no? I say people have to deposit 50,000 rupees with me. Now what happened now? Only serious people will apply because they have to pay money, right? That is, and what deposit you have paid, and if you are not going to be the winner, they will refund your deposit back to you. If it is getting accepted, then as per terms and conditions, they may submit it back to you. Why? Because see, I am a contractor, no, Baba. Why money should be with you? You have to give it advance to me, no. So terms and conditions will be generally once if whoever wins the bid or whatever, whoever doesn't win, that it will refund it. Now, on 31st March, is it my current or non-current? That depends upon when the bidding is going to happen. If bidding itself is happening after one year, then it is, as on today, it is non-current. GST deposit paid under dispute. God knows when this dispute may be non-current, no, because I may not be able to realize it. Now where we had it. Tedious, but that was a tedious, no? Other current, because there was, okay. No, but this is a question is here current or non-current? No, here not question under which head it should be disclosed. Yes, friends. So you can check that question if you can get that question, no, in Ind AS 101 or analysis. You can suggest. Okay, so now electricity deposit is on demand actually. So practically nobody will demand it. So not expected to realize within 12 months. So non-current. Tender deposit are paid for participation in the bidding. So one is not in a position to know whether you are going to win or not. So it depends upon when you are expected to realize. You can current or non-current. Now coming to the classification of the GST deposit paid under dispute, which is under protest, would depends upon the facts of the case and expectation of the entity. If in case you expect that you will get it within 12 months, current, else it is non-current. Now again this is an MTP question which has come in your RTP also, similar question. How should these items be classified? Receivables for sale of goods. Current or non-current? Current only, because it is operating cycle, no. Receivable will fall under operating cycle. Advance to suppliers. No, again generally advance to suppliers. It is like you have paid the money to the supplier right now, and without he supplying anything, you will not be able to manufacture. So once you pay, your operating cycle countdown starts, and after he supplies, then you manufacture, then you supply to the customer, and customer pays you, then your operating cycle ends. So this advance to customer, you cannot extend beyond receipt from the customer, no. It must fall within your operating cycle only. Clear, no, Dhanashree? PP equipment, the question is again, you have to make an assumption. It is an advance to suppliers is generally for your raw materials. Income tax receivable other than deferred tax, again current and non-current depends. Insurance spares, generally non-current, because you are not expected to use this, no. Spare, insurance spares. Yeah, it depends. I think it is in the, yeah, it's a part of your PP. No, see, generally after operating cycle means you would have sold someone, one of the customer, he may pay you. If you are paying after operating cycle, question is that operating cycle could be less than 12 months also, no. If he is paying within 12 months, still current. Now after 12 months, after operating cycle, not held for trading, then it is a non-current. Now receivable, you may classify them as a current when you are expected to realize within normal operating cycle. The current assets include trade receivable, because generally trade receivable means when you are expected to receive within 12 months of operating cycle. Thus receivables may be considered as a current. If the operating cycle exceeds 12 months, you may have to give certain additional disclosures telling, look, this customer is a current, but operating cycle is after 12 months. But generally it is less than 12 months. Advance to suppliers for goods and services normally deals with the classification in according to the normal cycle. So it's considered when it is current. If the operating cycle exceeds 12 months, give the disclosure. Capital equipments and all, they are not spoken. Yeah, generally your expectation that you will realize within 12 months only income tax refund. So it is classified as a current. Else if any refund is not, like it got stuck, then you think after 12 months, non-current. Now any spare parts which are insurance spare parts are recognized as per Ind AS 16 when they meet the definition, otherwise they are classified as an inventory. If it is a PP, because you remember one difference between Ind AS 2 and Ind AS 16 we discussed. One of the item was spare parts. It is non-current because you are not going to use it. If it is an inventory and if you expect to consume within 12 operating cycle, then it is current. Otherwise, it is a non-current inventory. Yeah, disputed we can show separately. Generally, we have to show separately. Auditor also reports separately because they have to tell, no, if anything is disputed, pending matters pending with the court. In CARO, they have to report. So you cannot hide that in somewhere else. Disputed, you have to show separately. Other current assets we have got a single, no. In no-show accounts, they will have the breakup there. Otherwise, other assets on the face, you will give only that much which is told by. There you don't have income tax and all. Okay, they have got some provisions and something. Note you have to give these breakups. OMN has got a subsidiary MN. Okay, OMN provides a loan to MN at 8% interest to be paid annually. The loan is required to be paid whenever demanded back by OMN. I think in 109 at the end there was one theoretical question, KK Limited, 3 scenario, when the loan is payable on demand, loan is payable after 3 years, when the loan is payable, when there is money with them. So how should the loan be classified in the books of OMN? Will it be different from MN? No, it is current, because if the demand nature itself says might be primarily to form to a form of protection from the tax driven feature of the loan. Both the parties expect and intend that the loan will remain outstanding for the foreseeable future. So if so, the instrument in substance is a long term, then it is non-current. If they don't have any repayment idea, means they have to expect when you will be repaid. However, OMN would classify the loan as current if both the parties intend that it will be repaid within 12 months. For MN, classification of the loan as a current, because you don't have any choice. For OMN, you may classify as a current asset or a non-current assets. But when it comes to MN, you have to classify it as a current because you don't have a right to defer for more than 12 months, regardless of the intention. The classification could affect the initial recognition, subsequent measurement also. Entities has to apply their judgment while giving the disclosures. So this is one case you have to understand, because this is illustration question. So when the person who has taken, it's more like a prudence also. Asset, you may show current, non-current, fine. But liability is current only because it is repayable on demand. An entity manufactures passenger vehicles. The time between purchasing a raw material to manufacture the passenger vehicle and the date the entity completes the production and delivers is 11 months. Operating cycle is 11 months. Customer settle the due after 8 months from the date of sale. Will the inventory and trade receivable be current or non-current? Assuming that the production time is 15 months, and the time lag between the date of sale and customer collection is 13 months, will your answer be different? In the first question, it's current. Why? It is, since 8 months what they pay from the date of sale, it is within total 11 months on an average. Second month, why? What is your operating cycle now? Huh? How? This is production time was 15 months, no? Completes the production and delivers the customer 11 months. No, Baba, see again, now what is operating cycle here? Tell me. First you tell me what is the operating cycle. It is 11 plus 8, 19. Now tell me if any customer pays within 8 months from the sale, is it current? Yes. In the second case, what is my operating cycle? 15 plus 13, 28. Is this current? Current. See, that's what we have been discussing. Simply they confused you with the number here. That trade receivable, since they themselves get into the calculation of operating cycle, they will be always current, irrespective of when you are going to receive it. Because Which one? Because what is your total operating cycle here? 28. And when these customers will pay you? Within 30 months, no? Which is less than 28. If one of the customer pays you in 13 months, whether your operating cycle is 28 months, it's current. No? Which one? No, you should consider on 31st March 2000 whatever closing. From now, how many months it is due? Now, if I assume that on 31st March only you have sold, when you will pay? 30th April 2025 we will pay. Tell me, on 31st March 2024 is current or non-current? By any definition you say it's non-current. If you take the 12 months cutoff, you say non-current, no. Why? Because he is paying you after 1 year from the end of this first my closing. But then I'll ask you one more question. What is the operating cycle? 28 months. That means, what if the operating cycle is 9 months? Non-current. Why? Because my operating cycle is 9 months. 12 months, so I will give you by default to classify anything current, but he will pay you on 30th April next year, no? Is sir? Yeah. You are what about this? What is that called? These people, right? Real estate companies and all. Their operating cycle is very big now. Their one project will take years. Customer also will not pay you full lump sum also. They may also pay you in installment. So that is why I have to, on 31st March, I have to check somebody is due. When is going to pay me? So first thing you compare with the operating cycle. Is it less than that? So even though your 12 months have crossed, you classify it. No, that is 2 months only my operating cycle, but somebody is paying me 30th September. Check 12 months criteria. Are you clear now? I hope this question must be much clear. So in the first case, the time lag between the entities is 19 months. So both inventory and debtors are current. Now the answer will be the same because your time lag is 28 months. So you should correct because he is going to pay you 13 months from the end of the financial year.